you, first of all, to Hoya Capital for having us today. At UDR, we always appreciate an opportunity to convey our value creation proposition to current and prospective shareholders. So UDR is an apartment REIT owning and operating about 60,000 apartment homes across the United States. We have an equity market cap of approximately $13 billion, and we're a member of the S&P 500. We purposefully own a diversified portfolio, and that's the case in terms of geography, as we're in about 20 markets ranging from the West Coast to the East Coast, but also in terms of the locations within those markets. We offer both urban and suburban apartments at a variety of price points to our residents. And our strategy is to innovate in the effort to convert data into decisions that maximize cash flow growth for our investors. And we accomplish this in a few ways. First, as a capital allocator, we seek outsized risk-adjusted returns via a disciplined and proprietary approach to investing in assets. Second, our operations team is constantly exploring new ways to delight our residents. And the success of that effort is evident in various ways, including our high resident retention, which indicates that our residents stay with us longer than they do with other apartment companies. This all results in cash flow growth that allows us to pay a consistent and attractive dividend to our investors. The 11% compounded annual total shareholder return to UDR shareholders over the last 25 years is in part due to that dividend track record, which includes 213 consecutive quarters of payments and an average increase of about 6% since 2010. Well, UDR was early to the institutional ownership of apartments and to the REIT space. The company was founded back in 1972, so we're proud of our 54-year-old track record of creating value for investors, and the REIT structure allows us to do it. It's allowed us to enjoy access to ample amounts of debt and equity capital, which we've utilized to grow the business over that time. I've enjoyed studying the apartment sector for about 2 decades through various cycles, many ups and downs. But over the long term, the track record is compelling, and today's environment suggests more of the same going forward. And several things come to mind. First, our customer is in sound financial health. The rent that our residents pay approximates about 20% of their income, and that's below long-term average levels. Second, the outlook for demand is favorable, particularly when we look at the population growth outlook for those currently in their mid-20s to early 30s. That's our renter of today and our renter of the future. And homeownership, unfortunately, is quite costly and out of reach for many. Apartments offer a tremendously comfortable and enjoyable lifestyle as an alternative. Lastly, what I mentioned is that new supply is on the decline. 2024 and 2025 were years with outsized growth in apartment deliveries, and it proved to be a challenge despite solid demand. Deliveries for new apartments are about 30% lower this year than last, and we expect that trend to continue into 2027. Well, what comes to mind as it relates to a potential concern would be contemplated solutions for the housing affordability challenge. They vary greatly across cities and states. And some municipalities have introduced policies in the effort to enact rent control. Fortunately, UDR possesses a diversified portfolio. We don't have outsized exposure and therefore risk to any single state or market, and we have ample exposure to the most business-friendly places. So our industry understands that the key to better housing affordability is more supply, and we're vocal along with our peers in the industry around that. We also do our part UDR is a developer of apartments and has built thousands upon thousands of homes over the years. One should consider investing in UDR for a few reasons. First, we have an extensive and successful track record of creating value for shareholders, including our generous and growing dividend. Second, our operational acumen is driven by a culture of continuous innovation, resulting in advantages such as our operating margin and resident retention. Also, we have a diversified and balanced portfolio. It's built for the full cycle. And lastly, perhaps most importantly, we have a differentiated approach to capital allocation. It's driven by data, it's driven by collaboration. It informs our decisions related to acquisition, disposition, development, redevelopment, and capital expenditures, all in the effort to maximize cash flow growth. It's a proprietary tool that we've built and continue to enhance, and we believe is a source of alpha for UDR.